In this video, we're going to answer the question, does it make sense to buy Bitcoin in 2022 if you still don't really know what Bitcoin, blockchain, or other cryptocurrencies are? We'll look at what's called Crypto FOMO, whether the early returns are likely to be repeated, and we'll see if there are any investment analogies about new technology that can help guide our perspective. And then we'll talk about how you might already have exposure to this space if you invest in index funds. Hey everyone, my name is Preet, and this channel is for anyone who wants to learn more about personal finance, investing, and the world of money around us. Let's talk about Crypto FOMO. It's hard to avoid hearing about Bitcoin and other cryptocurrencies because the headlines are everywhere, and they're never boring. One week it's someone who made millions by buying Bitcoin early, and the next it's a story of a dude who lost his password, and with it, $265 million worth of Bitcoin. Gone. Forever. And these days, it's rare if on your various social networks, you don't have exposure to at least one Bitcoin maximalist. A Bitcoin maximalist believes that Bitcoin is the only digital asset that will be needed in the future, and that all other digital currencies are inferior to Bitcoin. They may be somewhat evangelical in their beliefs. And one of the problems that I think a lot of people intuitively have is that there are just too many people who don't come across as credible and yet have outsized conviction that they know exactly how this all pans out. And part of you wants to dismiss them because sometimes some of them will make statements that are fatally flawed from either an economic, technological, or even just a common sense perspective. And part of you is still curious because you know it's possible for someone to have an incorrect understanding of something and still end up making money. And them saying I told you so would just kill you. On the other hand, you'll find a lot of people who are quite intelligent and have decided to work in the space or invest or are very confident about crypto but don't come across as cheerleaders, and you're intrigued. But you just don't know enough about the space yourself to have a strong opinion one way or the other. And then, of course, there's the advertising and marketing. Perhaps you've seen the Matt Damon commercial for Crypto.com, part of a $100 million marketing campaign, the tagline being that fortune favors the brave. And it includes a scene depicting a ship not unlike what you would have found explorers looking for the New World to have used. I don't know if it's worth pointing out that the European colonization of the Americas may have been responsible for killing 10% of the world's population. But a lot of people normally die in Matt Damon movies, so I guess it's on brand. Couple all of that with the high returns that get highlighted from time to time, and it has led to what is known as Crypto FOMO, the fear of missing out. So you are not alone. The question for you is, does it make sense to put your hard-earned money into something that you may not know very much about because you are primarily attracted by the stories of people who hit it big, and you wonder if that can happen for you too? Let's dive into that. May 22nd, 2010 is known as Bitcoin Pizza Day because someone bought 2 Papa John's pizzas for 10,000 Bitcoins. Priced in US dollars, that was $41. And those 10,000 Bitcoin today at roughly $42,000 per coin translates to $420 million. So, of course, buying something valued at 0.4 cents and then seeing it go up to $42,000 is a huge return. It's over 1,000,000,000%. It would be 1,049,999,900%. It's unlikely that we will see the same returns again. Just as a fun thought experiment, if Bitcoin continued to show that level of growth, that would require one Bitcoin getting to $882 billion per coin. That would put the market cap of Bitcoin at just under $10 quintillion. McKinsey estimated that the balance sheet of the entire Earth was $510 trillion. So that would put Bitcoin's market cap at just under 20,000 times the world's current collective net worth. Most analysts would likely agree that this is too bullish. And when I say likely, what I really mean is that they would likely throw you off a balcony for even suggesting it. Now, of course, no one is actually suggesting that the future gain in the price of Bitcoin will be anywhere near this level of growth. And that's the point. Everyone agrees that the early spectacular returns are unlikely to be repeated. It's also worth pointing out that very few people got those gains. Ask yourself at what point you would take your money out of an investment that was uncertain, volatile, and a little bit scary. When you were up 50%, 100%, 1,000%. Remember, even if you did get in early, you likely would have gotten out a long time ago too. So don't beat yourself up. You know, I went to the North American Bitcoin conference back in 2013 with a friend, and I think the price was around $80 a coin at the time. Do I regret not buying? Of course I do, with the benefit of hindsight. If I had just dumped $10,000 into it, that would have been worth $5.25 million today. But the same regret goes for not buying Amazon stock on its IPO, or Tesla, and so on. It's super easy to identify past winning trades, but even if I did make those purchases at the best possible times, I know there is no way I would have held on until today. If we look at the calendar year returns for Bitcoin starting in 2010, we again see that the early years are largely responsible for the long-term cumulative performance. But it's worth pointing out that the years with losses look like small losses in the grand scheme of things, and this is not telling the whole story. The most you could lose in one year is 100%, and when the y-axis is this big, that just gets lost in the mix. Let's just look at this infographic from visualcapitalist.com that shows Bitcoin's biggest drawdown since 2012. There are 15 massive drawdowns on this chart over the span of 9 years, and the average drawdown was 50.49%. If we compare that to the S&P 500, it's had 12 bear markets since World War II. So that's over 75 years, and the average decline was 32.5%. Bitcoin makes a 100% equity index look like child's play when it comes to volatility. One last word on Bitcoin's performance. You have to be careful when looking at how Bitcoin can be used as a portfolio diversifier, because institutional investment into Bitcoin is really only a recent phenomenon. We're talking the last 18 months or so. The past volatility and low correlation with equities may not persist. Any portfolio backtested with varying exposure levels to Bitcoin to date will always look better. But as more and more retail funds become available, making cryptocurrencies accessible through securities like ETFs and mutual funds, it's reasonable to expect that correlations to equities may increase and look quite different to what we have witnessed to date. Now, let's change gears from looking at the past and look at Bitcoin today and see if it really is as ubiquitous as the headlines might make it feel. Let's start by applying a concept that has been used for decades called the Rogers diffusion of innovations curve. This theory explains how a new idea or product becomes adopted by a population or a market or not. This is a normal distribution of a population, and we can divide it into 5 groups. The first 2.5% are the innovators. This group is willing to take big risks and have the financial resources to suffer big losses. They also tend to know each other or run in the same circles. The next 13.5% are the early adopters. They also take risks and have higher financial resources, and they'll run with the ideas that the innovators came up with if they think that there might be something there. The next 34% are the early majority, and the next 34% after that are the late majority. Collectively, these two biggest groups are about 2/3 of the population, and they need a lot more time before they get comfortable with an idea or product and want to see it battle tested a bit before adopting it. And the last group of 16% are the laggards. They basically only adopt something because it's hard to avoid it. If 26% of the world's population is under 15 and 10% are above 65, that leaves us with 59% of the world's population that we could roughly consider as the market for cryptocurrency users. From a total population of 7.8 billion, that equals 5 billion people. One estimate suggests there are over 300 million crypto users worldwide. This would represent 6% of the people on Earth between 15 and 65. That suggests we are still in the early innings of the early adopter phase. Now, some might argue that the overall market is smaller than 4.6 people, as some people don't have access to technology in general around the world. Even if you cut this potential market in half to 2.3 billion people, that puts adoption at 13%, which would still be in the early adopter phase. Now, a quick side note, it is worth pointing out that other models of innovation adoption are more aggressive in their predictions. Generally, that means that the tipping point comes earlier in other models. But another thing to keep in mind is that just because something is gaining adoption does not mean that the natural conclusion is that it will continue until there's 100% market adoption. While you might be able to say that for the underlying technology that makes cryptocurrencies and NFTs possible, it may not be Bitcoin that is the dominant cryptocurrency in the end. Before I give you my suggestion on whether or not to invest in Bitcoin or other crypto projects, I hope you'll consider hitting the like button if you're enjoying this video. It really does make a difference for creators like myself. The last thing I'll point out from the Rogers curve is that I think you can consider the risk and return characteristics of each phase as a conceptual model. Those in the innovators phase faced the biggest risks. Many new ideas fail completely, but the ones that survive will benefit those that created the innovation the most. They had the greatest chance of making those million% returns. The early adopters have less risk and less potential return, but still, this is orders of magnitude higher than for traditional investments like a portfolio of stocks. There is still a high enough probability of near complete losses in this phase that makes the risk insanely high. As you progress through the adoption stages, you would expect the risk and potential return to decrease. Again, I think this helps to give perspective to the early gains being unlikely to be repeated, but at the same time, it is not a foregone conclusion that Bitcoin ultimately succeeds to the point that some predict. It's still very possible that Bitcoin does not achieve mainstream adoption and future returns could be flat or negative. I really don't think anyone knows what's going to happen, but there's lots of money in making predictions about it and even more money to be made in promoting transactions of any nature. So here's what I think you should consider if you have been wondering if you should get in on Bitcoin or other cryptocurrency investments but haven't spent any time looking into it. Buy index funds. Index funds basically own everything, and if any cryptocurrency related investments or projects turn out to be big winners, they'll make their way into the funds and you'll have exposure to them. And in fact, it's already happened. Hut 8 Mining, as an example, is a Bitcoin and Ethereum mining company, and it was recently added to the official S&P TSX Composite Index. And that's just one example of a direct crypto play making its way onto public stock exchanges. But beyond that, if these technologies are truly valuable, then many other companies will benefit from the underlying technology to earn more profits. Companies like IBM, Microsoft, Daimler, Walmart, and many others are already using blockchain technology to increase efficiency and reduce costs. So you don't need to do anything different to benefit from the value of these new technologies if you're already investing in a diversified portfolio. The question you are implicitly asking is, should you make an outsized bet on them? And if you don't understand the space, I think the answer is no, because you shouldn't be investing in things only because you are attracted by past returns, and you can be happy just owning your index funds. I am not against people owning Bitcoin, Ether, Solana, Cardano, or anything else if you are making informed decisions and taking responsibility for your choices. Hopefully you know the risks and the difference between speculation and investing, and if so, do as you please. But again, if your only reason for wanting to invest in the space is because you have crypto FOMO, don't. You're not missing out. You already have exposure in your index funds or other diversified funds. And if they truly do transform the world, you'll get to participate in those returns to a certain extent as the winning companies get bigger and continue to get added to the various indexes around the world. And if specific crypto-related investments fall flat, you'll also have very limited exposure to those losses too. Leave a comment and let me know your thoughts, and if you have any questions I might consider tackling in upcoming videos. If you like this video, I hope you'll hit that like button and subscribe to my channel to learn more about money and managing your finances. And of course, hit the bell to turn on notifications for when I publish new content, and I will see you in the next video.